So, good afternoon, everyone. Thank you for joining us today. I am Patricia Alba, Assistant Director for Communications and Work Life at Human Resources. And joining us today, we have John Foltz. He is a Shine volunteer who's going to talk to us about long-term care planning. Before we get started, real quick housekeeping. The webinar is being recorded, so you're welcome to turn off your cameras if you don't want your face in the recording. If you have any questions, you can post them in the chat. We also have a Q&A panel that you can post your questions. If you want to post something anonymously, you can do that as well. If you need closed captioning for the webinar, there is a sort of circle that has a more option there. You can click on there and it will allow you to show captions or transcribe the webinar. Either one could give you those captions that you need. So with that said, John, the floor is yours. Thank you.
Okay, good afternoon. Hey, I retired from UF almost 20 years ago now. And when I hit 65 and wanting to learn about Medicare, I heard an ad for being a Shine volunteer and I said, hey, I need to know about Medicare. I'll be trained as a volunteer. And I've enjoyed it for 18 years now. It's the retirement activity that, besides church activities and those sorts of things, it's been real fun to be involved as a Shine volunteer. And so, one take home message for everybody is that age 65 and at 64 and a half, 6 months before you hit 65, everybody ought to begin talking with a Shine volunteer to learn their Medicare options and not miss any critical deadlines. So, with that, get started on today's topic. I'm going to turn off my video. Our topic today, long-term care planning. Note that this PowerPoint was revised by the Shine office in Tallahassee just a week ago. Okay. Shine is part of the Florida Department of Elder Affairs, and our mission is to help you learn, to provide you with free and unbiased health insurance counseling. And we don't need to do that. You go through this in the right order. Here's a disclaimer. The important thing here is that Shine volunteers are trained to provide you free, unbiased, and confidential information. And you don't pay us anything, and we're not insurance agents trying to sell you a specific policy. If we help you understand one and you got a buddy who's an insurance agent and want to sign up with them, that's fine, but we can help you do it for free at the Medicare website. All the programs, outreach programs of the Florida Department of Elder Affairs are administered across the state by these various area agencies on aging, AAAs. That's the federal legislation. The supporting money comes from the federal government. One of many ways, several ways to get hold is the statewide toll-free number, 1-800-96-ELDER. That goes to Tallahassee, and the people there will then refer you to one of the 11 regional agencies. And in the 16 counties of North Central Florida, the AAA agency is known as Elder Options. And we, of course, are the best of the 11 in the state. As Shine counselors, we help you with a variety of things. When you first enroll in Medicare, we help you distinguish between original Medicare and Advantage plans. You want a prescription? Well, you should have prescription drug coverage. Do you get it through a standalone drug plan or in your Advantage plan? And if you're an original Medicare that pays only 80% of your cost, then you might want to buy a private insurance policy called Medigap to help pay for those remaining costs. For those with low income, we have extra help for prescription drugs and and what's known as the Medicare Savings Program. Today's program, long-term care planning, and then complaints, appeals, fraud, and abuse. Realize that the Medicare Trust Fund pays out a humongous amount of dollars every year. About 5% of the payout happens to go to for fraud. So protect your Medicare ID, and if you think someone's committing fraud, report it so that those crooks can be appropriately prosecuted. Okay, what are we going to cover today? General overview of long-term care planning. We'll look at the services and settings, different ways of paying for long-term care, and then a variety of resources available for long-term care. So to get us started, I'm going to read this. Long-term care encompasses a range of medical, personal, and social care services, along with other forms of assistance that individuals may require due to conditions such as prolonged illness, disability, or dementia. It's not only the prolonged illness, but disabilities and dementia fit in here as things that we should plan for in long-term care. Here's a slide that the important thing is that you have access, you've been given a resource, a PDF file to download, and you notice in there are 11 blue hot links in it. It's much easier to download that PDF and click on those hot links. Some of the things that will be there, federal programs, CARES programs, and all, signed self-assessment guide, American Bar Association, then they repeat it here. And so make sure you download this particular PDF file. I encourage you to print it out and read it. And the flip side has some tips for planning for long-term care. So what do we as Shine volunteers help you with? We want you to recognize the importance of planning ahead, understand the different types of long-term care services available, want to take a look at the potential costs involved. How much of it can you meet through resources at hand, and how much of it do you want to begin planning for because those resources, the costs exceed your resources. So we'll look at funding options, and then overall preparing for long-term care needs, what they are. Will I need long-term care? Well, as bullet number 1 says, that anyone who reaches age 65 has a life expectancy of another 16, 17, 18 years. Then bullet number 3 says that of those who reach 65, 70% are going to need some form of long-term care at least once in their lifetime. In the middle bullet there, we all know population is increasing. The number of people who are retired and seniors, and then in declining health, that's going up. And as we learned during COVID, the medical resources aren't really sufficient to meet those needs. So I encourage you to be aware of this and work in the community to make sure that 20 or 30 years from now, you young folks will have the facilities, personnel you need so that you can get the long-term care that most of us will need at sometime towards in our later life. Why do we plan? Okay, we want to research the options. We then have, if we know the options, we have flexibility to choose. And importantly now, a key element of today's presentation is preparing financially. And also critically important here is we must involve our family. As a side point here, this presentation today is about the same as what I do on a monthly basis, uh, planning for long-term care, and other of the 11 agencies across the state also have this. Our floridashine.org website will give you a week or two heads up on what's available. But anyhow, when I do this, I have an addendum to this PowerPoint that the state won't let us modify. And I have information about informing, working with our loved ones so that we all know who is responsible for what are the wishes, and who will carry those out, who might be a very good loved one, but they just feel they can't handle that. So informing loved ones is certainly a part of preparing for long-term care. So what services and settings are we going to have? We often think, first of all, of skilled nursing care. These are medical conditions that require ongoing care. And there are medical personnel there, frequent use of RNs and therapists. And as it says, this can be for short. Many people will have a few days in long-term care and then get out and become healthy. Not in long-term, in skilled nursing. And yeah, often we think of skilled nursing as part of the rehabilitation process. And then at times we may use the full 100 days that Medicare provides us. Okay, personal care, custodial care are long-term care services. Right now, most of us probably pretty well take care of ourselves, but we may be taking care of a loved one who doesn't have the ability to do all the things they need to do. And then finally, as part of long-term care services, we look at hospice and palliative care. Hospice on Medicare is available if your medical team feels that you have less than 6 months, then you go into that and go into palliative care. But you actually can start palliative care without going into hospice, essentially deciding that nothing's going to cure me. I want to just live. I'm going to give up chemotherapy as an example and just go with pain medications and enjoy the rest of life. And a year ago, I had a very good visit with my brother as he was in hospice, having decided that no point in battling his particular cancer. Those are the sorts of things that we look at. Consider activities of daily living that we do automatically when we're healthy, but at some point in our life, likely we will not be able to do all these things and will require some assistance. So in general, if you require assistance in three or more of these things, we consider it, essentially you have a caregiver and you're in a long-term care, well, maybe short-term, but long-term care period. Another factor to consider is what setting will you live? You're going to be at home, you're going to be around in the community, or you're going to be in a facility. At home, you may have a family member caregiver with various services that come in, provide services to you. You may be out in the community or go out into the community to get some of those services like the adult day care centers, or are you um, going to go into an assisted living facility, nursing home, continuing care, retirement? We'll talk a little bit about those. Um, just to start off, one of my many experiences. My mother at age 93 had a stroke that put her in the hospital for 1 week. She went through her 100 days of skilled nursing facility that was paid for by Medicare. And then she went into assisted living facility for 3 years before dying at age 96, mentally sharp, but with a body that was worn out. Um, Another service that you should be aware of is CARES, the Comprehensive Assessment and Review for Long-Term Care. This is from the Florida Department of Elder Affairs, and the toll-free number can connect you with a team. And this is a team that will spend a few hours with you and probably come to your home. That's you've reached the stage where you need probably some custodial care. And so what can be provided for you at home? What are your resources? It's an assessment of your resources. And, in general, the idea is to help you live in the least restrictive environment possible. But at some time, it may be um, best to move into, say, a skilled nursing facility. So this team is also, if you are applying for Medicaid to assist you with long-term care, this is the team that will begin to gather the data on your medical and financial eligibility for those Medicaid programs. Okay, while I take a sip, any questions that we should about what we just covered that before we move into the next topic?
Let's see. I don't see any questions. I will drop the
Can I ask it out loud?
Oh yes, please go ahead.
Okay, thank you. He mentioned the 100 days of care, like that's allowed, because I know my mom was in a rehab center she was only going to be allowed to be there for 100 days before I guess some other payments we had to pay. But is that 100 days total over the whole insurance policy?
Yeah. Okay. Christina's presentation on Friday will go into more detail on that, and Shine Volunteers will certainly help you with that. But the Part A Medicare insurance has benefit periods, and right now um, I'm blank on it. It's $1,400 or $1,600 deductible as soon as you begin a benefit period. And so, yeah, you're in the hospital for 3 days, then you're eligible for skilled nursing facility. And we'll talk about it more in detail later, but that can only go for 100 days. So we hope you get well and you're discharged. And if you're out for 60 days without follow-up services, real hospital services, inpatient services on that, you begin a new benefit period. And so actually, you could have 2 or 3 benefit periods in a given calendar year, and many over a lifetime. So in any one given benefit period, Medicare assists you only for 100 days. Okay.
Perfect. Thank you so much.
Yeah. Okay. What does it cost? What costs should we expect? In general, if you're staying at home but want somebody to come in and help you for 40 hours a week, that's going to cost you anywhere. Yeah. Miami is the low cost part of the state, but up in Jacksonville, our area, $6,500 a month for somebody to be with you 40 hours a week for homemaker services. Homemaker services don't provide health care. If you need a health aid 40 hours a week, that also is about $6,500. Those are our ballpark numbers to put into mind. Say the individual is in home setting, cared for by a family member, but needs adult daycare, that would run roughly $1,600 a month. You go into an assisted living facility, it depends, what level you're at. When my mother first went into assisted living, she was at level 2, and back then it was about $3,000 a month, and she did her best to not progress to level 3 or level 4 with additional services and additional expenses. If you go into a skilled nursing facility, you're going to be paying at least $10,000 a month, or vicinity of $10,000 a month. So those are the kinds of numbers. Maybe you want to stay at home and pay $12,000 or $13,000 a month to have the services come to you, or it may be that you need to go into assisted living or skilled nursing and pay those kinds of fees. So that's just the kind of numbers that we're thinking about. Okay, now here is a little bit more. In the revision to make this ADA compliant, having the text large enough to read on screen, they didn't give this slide a title, but it's how much does Medicare cover when you're in long-term care? Your Medicare coverage is going to continue as general health insurance, but realize that Medicare really doesn't pay the long-term care room and board personal assistance type expenses. So as it shows here, if you're at home and have home health care come in, Medicare essentially pays that 100%. Your share of the cost is zero. If you need durable medical equipment while you're at home, Medicare pays 80%, and you're responsible for 20%. Your Medigap policy may cover that 20% for you. Your Advantage plan may cover some or all of that 20% for you. And if they don't cover the cost, then you may have a long-term care policy that can pay that for you. If we move into a skilled nursing facility, this is a Part A part of Medicare, and this is to the question that was recently asked. Medicare covers the first 20 days that you're in a skilled nursing facility. On day 21, there's a daily copay of $217. So if you're there for another 80 days, that's a big chunk of money. But Medicare coverage of skilled nursing facility services totally ends on day 100. And you're 100% responsible for what goes after that. And that's where, in my mother's case, she moved to a assisted living facility. And 20 plus years ago, that was only $3,000 a month that she had to pay to do that. Now, hospice, Medicare covers 100% of hospice care services, the social workers and nurses that visit you at home and that sort of thing. There's a minimal copay for medication. Say you are in a home setting and your caregiver needs to take a break, they'll cover the bulk of that cost. You have a copay. But what hospice care Medicare does not cover is the room and board. If Most hospice these days is done at home, and Medicare covers a substantial part of that, but no place does Medicare cover room and board type expenses of hospice. As I mentioned before, hospice, you become eligible for hospice if your medical team feels you would have a life expectancy of less than 6 months. Many people don't wait or don't start hospice soon enough. They delay hospice, don't want to face it. And case of my wife who died 8 years ago from Parkinson's, she went into the hospital. We thought was something she'd be discharged soon, and didn't realize that essentially those were her final days. And so she never got into hospice. Those are the situations. So I encourage you to become aware of hospice. And if you think that you do have a terminal illness, it's probably better to begin it earlier and not postpone getting into hospice. But once again, we as Shine volunteers would be happy to discuss details of your specific situation with you. Okay, what are options for funding the parts that Medicare doesn't cover? We're going to look at long-term care insurance as buying insurance to pay some or all of your expenses while you're in long-term care. We'll look at personal and family resources. What is your pension income? What is your other retirement savings income? And what savings do you have available? Those sorts of things. What are your resources? And what are some federal and state programs that might provide assistance with the expenses? Okay. First of all, looking at long-term care insurance. As the bullet points say, this helps you maintain independence and financial control. It helps you protect family resources. I'll discuss that a little bit more in a minute. Having this financial resource, it allows you to consider perhaps greater range of care options. And an important thing here, insurance policies may be limited to nursing home only or home care only. They're cheaper than having a policy that covers everything. But today almost all policies are combined. But in the past, it was quite common. Well, you couldn't afford the combined policy, so flip a coin. Are you going to take nursing home or home care policy? And by Murphy's Law, what you needed at end of life was the one you didn't choose. So the industry today, pretty much all policies have both that. Now, okay. A rule of thumb for whether or not you buy it. If premiums, which are high, exceed 7% of your income, it's probably not worth buying long-term care insurance. And if you have few assets out there that nothing to protect, then don't bother that. And so obviously premiums are based on the age that you buy the policy, your health conditions, your coverage, which of these things you want to buy, benefits and that you select, and various other options. So what I'm going to essentially pause the slideshow and give you verbally some of the information that I do in my PowerPoint addendum to my monthly presentation. And I'm going to share with you my personal experience too. Yeah, a long time ago. When I was 67, my wife was 64. We decided we ought to investigate long-term care insurance policy. Um, and I finally got a policy that in 2010, my annual premium was $1,750 or thereabouts, $1,700 a year. If I'd bought it earlier, I could have had a lower premium. Those things. Um, in Florida, all long-term care insurance is age-based, and so it's the sooner you buy it, the cheaper the annual premium. That's the way insurance works. Um, your health at the time you purchase the policy determines your premium. I told you I got a policy, but my wife, because she at age 53 had had a heart attack, there was nobody that would, we quit looking after the first several denials. No one really wanted to insure a person who'd had an earlier heart attack. So, message here is buy it young before you have something like an unexpected heart attack. If you think that you want long-term care insurance. Okay, back in 2010, the reason we were looking at long-term care insurance was that, as a couple that I had already retired and she was almost ready to retire, we were worried about one becoming seriously ill and draining the family resources. So it was an insurance policy to postpone medical bankruptcy. That's kind of why most people buy long-term care insurance. The coverage that I purchased was, both nursing home and home term care. That's what is covered by the benefits. How much do you want? Well, we did an assessment of our cash flow, pensions, and available resources, and we didn't want to buy a policy for the full $10,000 a month. We thought that if I bought a policy, what I wound up with was a policy with maximum monthly benefit is $3,600. Felt that we had the resources to cover the remainder of that, but an additional 3,600 at that time. And then do you want it for 1, 2, 3, 5, 10 years? This also affects the premium. I decided that, in consultation with an insurance broker, that the 3-year policy would be pretty good. And the statistics are that the life expectancy for someone who starts a long-term care policy is less than 3 years. And just playing the odds. So I bought it for 3 years, and rather the 2 would have been cheaper, 5 would have been much more expensive. Those are the sorts of things that you discuss. So, my policy was a maximum of $3,600 a month, and it's called a 3-year policy. You multiply that out, it comes out close to $130,000 is the maximum payout. But in long-term care insurance, it's not like the Aflac policies advertised on TV. The long-term care insurance is reimbursement insurance. So every month you tell the insurance company that here are my expenses for the month, and I only need and can justify $2,000. So at $2,000 a month, that $130,000 would last a lot longer than 3 years. So those are maximum monthly benefit is 3,600, and maximum lifetime was 130. Options. Now we get here. Most policies sold today have inflation protection in them. So in my case, yeah, it started out at 600, but every year it gradually increased. Um, some policies will increase with the cost of living index, and some just say, well, we're going to do 3% forever, just automatic 3%. Okay, a couple other things I want to discuss here. Um, all long-term care policies have an elimination period. Typically, it's 100 days, and that corresponds to the Medicare skilled nursing facility 100-day something. So that, yeah, in the case of my mother, she used up her 100 days, and I don't know that she had a long-term care policy, but it would have then she would have met the criterion of having that 100-day elimination period. There's a similar period for people suffering from dementia. You get your medical team to declare dementia, and there's a 100-day waiting period in there, and then the policy becomes active and will reimburse you up to the monthly amount. So that's elimination periods are actually an option, but standard 90-day or 100 days is the standard for elimination period. Some of the options, a respite care benefit. Yeah, my policy had $120 a day, so that if I had a family caregiver who needed to take a break, the policy would pay $120 per day for that. An option in my policy was what they call additional stay-at-home benefits, equivalent to the 1 month maximum payout. And that was, say that you qualified for home care, your medical care team said that you were in long-term care and qualified for home care. Okay, what is necessary to modify your home in order to have you stay there? Do you need a wheelchair ramp? Do you need to put in, let's see, look at my list. Emergency medical response system. Do you need durable medical equipment? If Medicare and your Medigap policy don't pay for your durable medical equipment, then you can charge that to your long-term care insurance. It also includes caregiver training and a home safety check. So that's one of the options that was available in my particular policy. Okay, now a little bit more. I told you that in 2010, I bought this policy for $1,750 a month or something, a year at that annual premium. After about 7 years, the company said that because we've had inflation for this period of time, we're going to under Florida law they can increase the premium by 10% at a time, 10% a year. They said it's time to do the 10% increase. If you don't want to continue the policy, we will reimburse you all the total value of the premiums you've paid to date. And I decided I'd continue paying the 20% or the extra 10%, continue the policy. And so it went up to 1,900 and something. I paid that for a few years. Then a couple of years ago, they said, well, it's time to increase the premium an additional 10%, another $200 a year, roughly at that time. And if you don't want to continue that, we will give you a prepaid policy for 150% of your premiums paid to date. And so in my case, they said it would be a prepaid policy of $35,000. It would continue at that point. The inflation, it was at about $5,000 a month. So it was $5,000 a month for about 7 months, prepaid, no further premiums. It's good for the rest of my life, and I'm not sure if it's inflation adjusted or not. Okay, my wife had died, and I asked myself, question, why am I continuing this particular policy? Why do I need long-term care insurance? Um, the my two kids are well enough off. I don't have to do any financial protection for them. Long, I don't need long-term care insurance. I'm going to take this prepaid $35,000 policy, and it's there. And so if sometime in the years ahead I become eligible for that, I am going to take it as soon as possible and get my money back from the insurance company. But if I drop dead suddenly, the insurance company gets to keep all that money that's accumulated. So that's my digression to fill in and help you better understand long-term care insurance. You may not want it. You may want it for a period of time, and it may be time to give it up. But those are things to consider in planning for long-term care. Okay, going on here.
John, we had two quick questions.
Okay.
One of them was, where do you get long-term care insurance?
Okay. It's from private insurance companies. Yeah, do a web search. Ask your favorite insurance agent that. But
Would Shine, like
certainly,
if somebody goes to meet with a Shine representative, would they be able to guide the individual to companies?
okay. What I can say is, as a Shine volunteer, I encourage you to find a long-term care insurance broker, one who is probably not your neighborhood insurance agent who may have something but doesn't really know what it is. And so my wife and I had an hour-long conversation, yeah, essentially going through a survey with the broker. And then she said, well, of the many policies I sell, let's start here. And sometimes there are companies that will give you a discount for a couple, those sorts of things. So that's what we did. Um,
And the
but
reasons,
I can't, as a Shine volunteer, tell you to go to this person.
gotcha. And the reasons for denial, is that depending on the company or are they
Yeah,
they
yeah. There's no guaranteed issue in long-term care insurance.
okay,
You have to find a company that's willing to sell you a policy at a price you're willing to pay.
gotcha. Thank
Um,
you.
yeah. Okay. About every state has what they call a long-term care partnership program. And the state legislature has figured out it's best, cheapest for the state of Florida if people have long-term care insurance instead of going on Medicaid early. Essentially, long-term care insurance helps you postpone Medicaid. It Medicaid for long-term care is well, essentially, you have to have depleted your resources to less than $2,000. However, if you've had $100,000 long-term care policy and you've spent that $100,000, you would qualify for long-term care Medicaid at $102,000. So it's a way to retain assets. But yeah, you need to use it and then it qualifies. Yeah, another benefit of this is that um, it's not infrequent that someone needs long-term care. They apply for Medicaid. They're qualified for Medicaid, but most of the skilled nursing facilities around town have only a small percentage of their beds available to Medicaid patients. If you have a long-term care policy, you can go into that five-star skilled nursing facility and pay for a lot of it with long-term care insurance. And then when that insurance runs out and you acquire Medicaid, you already have your bed there in the skilled nursing facility. Uh, a reason you might want to consider long-term care insurance and how the dollar for dollar asset protection aspect of it lets you choose your skilled nursing facility, go into any available bed, and then later on down the road, a few years, you would qualify for long-term care Medicaid. But thinking back, my mother-in-law's situation, she didn't have a long-term care policy. She was up in Michigan and yeah, in her 90s. And the sister-in-law taking care of her up there just says, well, she's in assisted living right now. And when she depletes her savings account, we'll just apply for state of Michigan Medicaid. That was the attitude. There wasn't any planning for long-term care insurance in my mother-in-law's situation. Okay, other coverage options. Do you have annuity and life insurance policies that are available to provide money to help support the high cost of a skilled nursing facility or assisted living facility? And you're seeing ads on TV these days that they'll buy your life insurance policy or annuity, but a lot of policies. And okay, for you who are still a good number of years away from Medicare, you might talk with your financial planners now and buy some kind of annuity or life insurance policy that has a long-term care rider in it. There are many more financial options today available today than when I retired 20 years ago. So there are these options out there that, yeah, if you drop dead suddenly, it's a life insurance policy, but if it's, yeah, particularly a whole life policy with accrued cash value, you can draw on that cash value when you need it. So there are several publications on that resource handout that talk about selecting long-term care. And I believe it's the flip side of that PDF file. The Florida Office of Insurance Regulation recommends that you take your time, don't get rushed. Spend some time meeting with your financial planner or trusted agent. Never buy long-term care insurance from somebody who rings your doorbell or calls you up and says, hey, you ought to have what I'm selling. Okay, moving on. What are the family resources you might have available? Yeah, your life insurance policy. Do you have employer or union long-term care insurance? These are often, yeah, low premium for healthy people who are working. But important question is, will they carry over into your later life? That's that. And yeah, it needs to be combined with the disability insurance that you might be considering. Do you have trusts and annuities that can provide some income? And then what we're going to look at right away is, how about home equity or reverse mortgages? Okay, there's one of the hot links on that resource guide is to this publication, Use Your Home to Stay at Home. Um, uh, Now be aware that home equity loans and reverse mortgage loans are totally different financial instruments. I personally have had a home equity loan for over 40 years. Yeah, with my bank, we renew it every 10 or 15 years, but anyhow, that allows me to borrow money, and so I've bought 3 or 4 cars, reshingled my house twice, those sorts of things, using my home equity loan, and then paying it back with a monthly payment, and gaining greater um, equity while reducing the the balance, the outstanding balance. A reverse mortgage loan is a totally different type of financial instrument. Um, and be aware, as it says here, um, essentially the bank or the institution, whoever buys it, say we'll loan you money, and we can loan it to you a little bit at a time, and when you die, we take control of the house. That'll pay off your loans, and anything left, it'll go to your heirs. So that changes things. Uh, the This kind of instrument affects your eligibility for supplemental security income and Medicaid and other things. It messes that up. Whereas I didn't mention that back for Medicaid, when they look at your resources, the the equity in your home and your primary automobile are not counted as resources. What you have in your savings account is a resource, but the equity in your home isn't. So, and that's how if you're reducing the equity in your home and taking it out in benefits, putting in the bank account and all that, it messes up your eligibility for SSI and Medicaid. And certainly, as the final point it shows, it affects the eligibility of your children to inherit your home. The bank has essentially takes over ownership and says, "Well, we'll get our money back, and then your children can have anything that remains." So be careful. I shudder to think years ago in counseling, a newly retired couple, they were very boastful, proud of the fact that they had retired and they had just gotten a reverse mortgage loan, and now they were off to see the world. And their home didn't have sufficient equity to give them 20 years of income. However, if you're really approaching the end of life and have substantial equity and need the cash, a reverse mortgage loan might very well be the appropriate instrument for you. A quick look, just mentioned there are a bunch of federal and state programs. Are you a veteran? Do you have VA benefits? Federal employees, members of the uniformed services do have some benefits. Already mentioned the CARES program, which is an assessment and review for the next point, the statewide Medicaid managed care long-term care program. So I just call it long-term care Medicaid is my handle on that. If you are in long-term care and or a family member's in long-term care and you're having problems, realize that there's a federal ombudsman program that can be an advocate for you in helping you resolve problems with nursing homes, assisted living facilities, adult family care facilities, and continuing care retirement communities. Yeah, that's what that program is. I'm going to digress just a moment. Another one of the experience that my nephew and his wife had with her mother's long-term care policy. Mom developed dementia, missed a payment, and daughter learned about it. They contacted the insurance company and who referred them to the 1-800 number. And anyhow, she had a big policy, like a 5-year policy with lots of things, but because she had missed a couple of payments, they canceled her policy. Even though, yeah, as soon as the family learned about it and offered to pay, the telephone person was actually a gatekeeper instead of a facilitator, and told them, well, tough luck, folks, you missed it. Whereas if that person had known state law and that sort of thing, they should have been able to make those payments. Mom would have qualified for the dementia coverage, long-term care insurance, and would not have depleted all of her financial resources, which is what happened when she died. Nephew went to court and also used the state of Washington Office of Insurance Regulation, and this result was that the insurance company messed up, and after it got into court and the court said, hey, you messed up, it went to a vice president of that New York based insurance company and said, we messed up, pay them their money. But realize that, yeah, the insurance company's out there to make money. You may run into a gatekeeper instead of a facilitator. Involve your state insurance commission as soon as possible anytime you are having problems with an insurance company. That's that take-home message, and why I digress. Oh, right here. Yeah, all agents and policies in Florida are regulated by the Department of Financial Services Office of Insurance Regulation. If you have any questions, contact DFS Consumer Helpline, and that is on the resource guide that you were provided. Okay, we're getting close. Any quick questions on what I just covered?
I am not seeing any questions in the chat. If somebody has a question you want to ask, let's see. I think we're good. You can go ahead.
Okay. Let's see. Okay, yeah. A very useful 16-page PDF file is this Shine Long-Term Care Insurance Self-Assessment Guide. It goes, and there are lots of other Medicare-related resources available at floridashine.org on the resources tab. But this guide is, I say, a good starting point if you're thinking at all about long-term care insurance. Page 2 helps you do a financial assessment. Yeah, what is your current income? What are your medical expenses? Those sorts of things, and gathering together your current finances before you move on to, well, can I afford, do I want long-term care insurance? As it says here, this guide helps you in asking the right questions. Let's see. There are a couple other publications I'll try to mention later if they're not covered here. Okay. The Florida Department of Elder Affairs has its elderaffairs.org website there, that link there. Once you get to that website, you click on programs and services. There are many, many services there. Shine is just one of those. And so the elder helpline, that 1-800-96-ELDER number, is a link to, I'm going to say, 100 different programs, a large number of programs. Shine is only one of them. So if you are concerned, have a question about elder, yeah, just call that number or go to the Elder Affairs website, and the operators are trained to listen to what you might need and be aware of the many different programs that are available through the Florida Department of Elder Affairs. The Florida Division of Department of Financial Services has this 32-page long-term care guide. The link to its PDF file is on the resources guide. It's goes beyond the 16-page Shine introduction. And what I particularly like about this, at the end of it, it has a 3-page glossary. If for nothing else, you ought to download this and look at the glossary, become aware of the special terms, the jargon used in long-term care insurance and long-term care world. Yeah, just make sure that you understand the terms, and so when you're talking with somebody, you're using the same definitions. There's not confusion. Yeah, my career as a forest entomologist, I'd get a telephone call and somebody would start explaining the problem, and I had to always be sure that the language they were using was, was it our entomological forestry terms, or was it just their impression, and make sure, that whoever you're talking with, you're talking the same thing. An excellent guide. The federal website, longtermcare.gov, last I checked, it was still operational, and it will have links to a whole bunch of publications. Before I think about it, this, backing up one, there is a 64-page publication that isn't in this PowerPoint, but it is on the resource guide from the National Association of State Insurance Commissioners. It's very similar to this 32-page guide, but once again, it's many of the same topics written by a different person, so the wording's a little different, and it has a 5-page glossary. So I encourage you to get that publication as well. Okay, we already talked about long-term care. Okay. This is the end of the abbreviated publication PowerPoint that I just got from Tallahassee. We'll go into questions and answers. Once again, encourage you to contact your Shine program throughout the state. Here in North Central Florida, Elder Options is the AAA agency, and also the Florida Shine website, Medicare.gov website. This publication didn't go to Medicare.gov, and hospice publications and long-term care publications, and resource guide. Do you want to know all the skilled nursing facilities within 25 miles of your home zip code? Medicare.gov website can give you that list. Those are sorts of things. So anybody who wants to write down this tinyurl.com/survey for Shine, that's a very quick survey, and you can tell the state office that you participated in today's presentation, what you thought of it, your suggestions for improvement. And these surveys are used by the bean counters in the state and federal legislatures. Is the money spent to hire Shine volunteers, well, not to hire, to support the Shine program, to support all those volunteers. Is that money well spent? I think it is. It's a good use of your tax dollars. So, yes, with that, I am done. Unless there's a question where I should refer back to a previous slide, there's no reason to keep the PowerPoint up. So, yeah, we've got 20 minutes left for Q&A. If it's something that you're not hesitant to share and it's of general interest, please do that. If it's something you want to keep private, contact Shine and we'll talk about it in private.